Good morning, team. Welcome back to another video with, of course, me, Ross. Now, in today's video, we're going to be covering a very highly requested topic. And this topic is the understanding of pivotal highs and lows, what they mean for you, where they fit within our Orion trading system, how we can spot them within the market, and ultimately give you a rule-based way of tracking these points and being able to utilize them in many different ways. Now, if you are using the Orion trading system already, you're probably very aware as to what pivotal highs and lows are. But if you're not, you can use them in many other ways. But remember this, pivotal highs and lows will serve a purpose if you integrate them into your system. On their own, they serve nothing more than a reference point. So, if you don't know what they are, hang around, you're going to find out. I appreciate you guys if you hit that thumbs up button, and if you hit that sub button. Of course, we have a free Discord, and we go live on TikTok and YouTube every single day. So, without further ado, let's get down to the diagram chart, and I'll start showing you some of the principles that are going to help you locate these points in the market. Okay guys, so as we explained in the intro, we're going to be doing a short period on the diagrams, just giving you all of the rule sets and the really systematic way, well, completely systematic way actually, that you are going to be able to highlight these points in the market. And then we'll showcase to you how they line up with the Orion system and do some live chart markups. So we're not going to keep this in a long form content. It's going to be like a short form video. So it's nice and snappy for you guys to learn. So let's get straight into it. Now, where we are at the moment, you can see we have a chart on our screen. What we're going to do is shuffle this slightly out of the way. And then we're just going to go ahead and draw some amazing drawings for you guys. So we're going to start off with what a pivotal high or low is. Now, a pivotal high or low is very simply a high that is situated in the market and also a low that is situated in the market. But there is a very clear and distinctive rule-based system that we can use to identify them. And that rule-based system is simply this. We're including every part of the candle's anatomy, including the wick. And for a pivotal low, your rules are going to be this. A pivotal low in the market is a low that is found to be lower than the candle that came before it and the candle that comes after it. The pivotal will be the lowest point. Okay? If you do not fill this criteria, it is not a pivotal low. Now, the same thing applies for a pivotal high. We're going to have a wick that sits higher, or it doesn't even have to be a wick, it can just be a candle body, but ultimately most candles have wicks, so generally it's going to be a wick that will sit higher than the candle that came before it and the candle that came after it, giving you a pivotal high, which is the peak. If these rules are not met, it is not a pivotal high. Now, what is it that these points mean? And how is it that we utilize them? Why do we choose to use these points? Well, it's very simple. We choose to use these points because of the simple understanding that Institute is injecting pools of liquidity into the market at given areas. Now, these areas are not dictated by any singular thing. They can be relatively sporadic, they can be quite random, but this gives us a structure to follow and a principle to back up what we're seeing. Now, when a pool of liquid is added to the market, it is generally going to have a movement. Now, this is what we like to look at as a cause and effect based move. Okay, often resulting in a higher time frame pivotal high or low being created. Now, the same thing is going to happen at the base of a move. You'll have another pool of liquidity, which is going to be the cause, and then this is going to be the effect. Now, of course, as I said, we will show you this on a real chart, but for now, this is the main thing we need to understand. Why is it that we use these points? Well, we use them because the probability of seeing price action react at one of these areas, here or here, is simply higher than it would be at other points in the market. Now, of course, if you know the Orion trading system, you will know for yourself how consistently you see reactions from these areas. Now, it doesn't mean that every single point we see is going to give us a reaction, and it all has to be used in context with our bias. Remember, you can get this bias indicator completely free from the Pip Surfing Society Trading View. You can just head over to Trading View, search Pip Surfing Society, add it to your chart. It's completely free. Now, there's going to be 3 different things that is going to happen when you get to these areas, okay? You're going to see one of these 3, and those things are going to be this. We're either going to get to these areas and price is going to continue moving in the direction that it was when it was traveling to this point. You're ultimately going to be getting a fuel from this liquid and it's going to push price up higher, okay? Or we're going to see price hit this area and consolidate. This is normally a sign that this investment has been rearranged or they're reaccumulating to go long again. And then finally, the movement that we focus on is price reacting here. You will see more volume come into the market and you will see our entry be given for the Orion trading system. It's at this point that you will reference the pivotal high or low that is opposite. Okay, now in this case, if we're looking at this scenario, which would be a bearish scenario, you would ultimately look for price to run to this area. Flip it on its head, and if you're looking for a bullish movement, you will be looking for price to interact with this area. Of course, you can see price either come down through, consolidate at, or expand away. Each time the market interacts with these areas, it is going to have the same probability to give one of these free as it is to give you an entry, as it is to do anything. Remember, the market can do any number of things. If it's trending, expect it to keep trending. If it's consolidating, look for external points to reference from. So now we've covered the rule set, we can look at the live market and I'll show you some examples of how this has actually played out and how you can begin to utilize it in your trading system. Okay guys, so we have scrolled slightly back from live price where we were earlier, as we have some very nice entry criteria within here to show you. Now, this video is not about me showing you entries and what you could have seen, what you could have got. It's about understanding the principle of why we use these points and how you can learn the rules to utilize them. Now, what you are going to notice is I do have on my screen a filter on my candles that is ultimately going to give you the highest volume for each candle. So, for example, only candles with higher than average volume are going to have coloration within them. So any pivotal highs and lows that have coloration give your entry criteria a lot higher probability to actually play out or react, if you were, at those areas. Now, as you can see on my screen, we have several points that are highlighted. Now, what I would like you to do is look at these highs and think to yourself, what is the rule for it to be a pivotal high? Well, does it sit higher than the wick or the candle that came before it and the candle that came after it? Yes. Okay, well, this is a pivotal high. Awesome. The same thing applies with this. Is this a pivotal high right here? Does it sit lower? Does it sit higher than the wick before it and the wick after it? Yes. Is this a pivotal low? Does this sit lower than the candle that came before it and the candle that came after it? Yes. So that is a pivotal low. It's as simple as that to be able to find the points in the market that you want to reference. Now, when we come down to our entry time frame, you can see the way that we're starting to utilize and use these points. Okay. Now, this is a sell move that actually should only have gone to here. Okay, using the Orion entry system, we've taken a pivotal high and we have seen a reaction here. Now, this has allowed us to execute our entry model and ultimately aim for our next opposing low, which would be here, giving you 2 clear points within the market where you would expect price to run to and from. Again, if you haven't watched the Orion Trading The Purpose, then you should watch that video. Make sure you check that out after this. But it is simply as easy as that. All you're looking for is a pivotal high and a pivotal low to reference your bias. That's why today we have this low that has just been hit. Is it lower than the wick that came before it and the wick that came after it? Yes, so it's pivotal low. And where would we look to aim for? We will look to aim for here if we're expecting to see our bias play out into these highs. Now, we have had some developments on the Japanese yen over the last couple of days, so whether we see this or not is, completely subjective. And also, just because you have targets doesn't mean the market's going to run to them. Always understand this. The market can do any number of things, whether you're in a trade, out of the trade, looking for one. It doesn't matter. The main thing is always going to be, what do we want to see and where do we want to go to? When we come down to the 15-minute here, you can see that we see a high volume injection. So you can see that liquidity is present in these candles and price action moves away, giving reference again to the understanding of what pivotal highs and lows are. Now, the easiest way to track pivotals without missing them is to read your candlesticks from right to left. So you're going to read it the opposite the way you would in English. So what we're always going to do is ignore the first candle because it's live, so there is potential for this candle to come higher or lower. It doesn't get involved in our reading here. We're going to simply follow this back. Does this sit higher than the one before it and the one after it? If the answer to that is yes, then you can mark it as pivotal high. Now, we've just discussed this is not valid because this candle has not closed. Now, when we follow this back, you can see our next high is here because it sits higher than this and this. Follow it back. Our next high is here. It sits higher than this and this. Follow it back. This is our next high. It sits higher than this candle and this candle. Follow it back. This sits higher than this candle and this candle. So you're going to see the way that if you track this back, you're going to be able to reference your points of liquidity very, very easily. And it's going to give you the most simplistic and easy way to navigate between your points of liquid. So guys, that's it. That is really it. It's not a hard concept. It is a very simple rule-based concept. As always, guys, I appreciate every single one of you. If you haven't already, hit that like button. I hope this video has been useful for everyone that's been requesting it. It's very simple, very easy. And of course, like I always say, keep it simple, stick to your risk, and of course, follow Orion. Until the next one, guys, have an amazing rest of your day, and I'll speak to you all very soon. Peace out.